So the next general type of insurance that one will find on a construction project is really construction specific, and that's builder's risk insurance. Unlike CGL insurance, which is commercial insurance that all sorts of businesses have, builder's risk is really specific to the construction process. And it's what we refer to as, quote, first party insurance. That is to say, it's designed to protect the insured against the insured's own losses. And it's property insurance. And so, whereas CGL insurance, for example, is designed to protect the contractor in the event some third party gets hurt and makes a claim against the contractor, builder's risk insurance is designed to make the contractor whole if its own property gets damaged or destroyed during the course of construction. And again, to varying degrees, all the participants in the construction process have some interest in the other parties carrying builder's risk insurance. Typically, it's carried either by the owner or the contractor, but because the construction process is itself inherently risky, and there are a lot of things that can go wrong that will end up destroying or damaging property, it's important to understand that those construction-related risks have their own kind of coverage available, as opposed to general commercial property insurance, which again, businesses of all sorts have property insurance, but builder's risk insurance is a specific kind of commercial property insurance that's designed to protect the property that's most at risk during the period when the risk is highest, that is during the construction process itself. So again, the AIA forms, including Exhibit A to A101, have the provisions requiring either the owner or the contractor to carry builder's risk insurance. Now, it's worth noting that there are a number of provisions in Exhibit A that require specific things in a builder's risk policy. And builder's risk policies, unlike CGL policies, tend to be more what are called manuscript. That is, where there's more tailoring of the policy itself than is common with a CGL policy. CGL policies tend to be sort of in the can. An insurance agent takes it off the shelf, fills in the blanks, and charges a premium, and you go forward. Builder's risk policies tend to be more negotiated, and the terms crafted to reflect the particular needs and interests of the insured who's getting the insurance. So, for example, the AIA form requires the builder's risk to be written on a, quote, all risk basis, excuse me, as opposed to a named peril basis. And the difference there is just that the all risk basis says that the policy covers all risks unless they're specifically excluded, as opposed to a named peril policy, which covers only specific types of risks that are, or perils that may come to pass that might result in property damage. So an all risk policy is broader in its coverage than a named peril policy. The AIA forms require the builder's risk to be in the total amount of the completed value of the project, as opposed to some sort of diminishing schedule of the work in place, and to be at, quote, replacement cost. Okay, that's important because the cost of replacement, as opposed to the fair market value of work, can be very different. And in order to really make whoever suffered the property damage whole, what you really want is replacement value coverage, so that the insurance company has to pay for whatever it's going to cost to replace the damaged property, as opposed to just whatever the fair market value of that damaged property to compensate for the loss in fair market value. it generally runs until builder's risk insurance generally runs during the course of construction up to the point of substantial completion of the project. At that point, when the project is ready for its intended use, usually a commercial or general commercial policy will take over. Now, it's important to make sure that there's no gap in insurance there, because even after substantial completion, bad things can happen, and so it's important that there not be a gap in coverage between the time the builder's risk insurance stops and some new general commercial property insurance takes over. No gap in time. And finally, the AIA forms require a number of individuals a number of different project participants to be named as additional insureds under the policy, so that, for example, a general contractor carrying the builder's risk insurance will have its subcontractors as additional insureds under the general contractor's policy, so that there's only one policy that needs to be looked at in the event that something bad happens to the property of one of the subcontractors. Now, the subcontractor may have its own builder's risk policy that may provide coverage as well. And in that case, you've got a coordination of policy question that may come up. But understand that there can be a number of additional insureds under a builder's risk policy besides whoever's formally taking out the insurance itself. Now, some of the coverage type issues that come up under builder's risk policy, I've listed these in the slide, and I'm not going to go through all of them. Just understand that under each one of these kinds of issues, again, there's a whole body of case law that's arisen that may address and help define exactly when there is and isn't coverage. To take, for an example, the insurable interest requirement. Now, insurable interest is something that's a requirement of insurance policies generally. Okay, for example, I can't take out a policy of life insurance on somebody I've got no relationship to at all. That's essentially in the nature of a gamble, and I have to have some interest that legally is capable of being insured, or I can't take out an insurance policy on a car insurance policy on somebody else's car whom I know to be a bad driver, so that if they get into a wreck, I get the insurance money. No, that's not how that works. You have to have an insurable interest in order to take out the policy in the first place, or else just as a matter of public policy, you're not going to be entitled to recover. Well, the way that comes up in the construction context is that the party making the claim under the insurance as an insured or an additional insured actually has to have some insurable interest in the property that's damaged. And defining exactly the parameters of that is a complicated thing that's defined by the case law, and we're not going to get into a lot of detail on that here, but just realize that builder's risk policies, like CGL policies and insurance policies generally, have given rise to lots of cases defining the parameters of coverage and exclusions and exceptions to exclusions. And you have to understand that case law and the jurisdiction that you're talking about, in addition to making your way through the policy itself. Again, as with all insurance policies, in addition to coverage, there are also exclusions. And I've listed some of these here. These are part of some of the exclusions that often come up in the context of a construction project or construction-related projects. I just point out the pollution one you will have seen a number of times. Pollution is something that is very expensive to fix once it's out. And so this is one of these areas where, even though there might be some property damage as a result of some pollution, for example, contractor's using some solvent to perform some task, like putting down or cleaning up some sort of adhesive. Well, that stuff gets out, it damages other property or hurts other people on the job and whatnot. The pollution-related risks are essentially so great that the insurance company has made a calculated decision. Okay, we're going to exclude from the garden variety CGL policies or builder's risk policies risks associated with pollution-related events. And if somebody wants that kind of coverage, it's going to be in a separate policy altogether. So even though you might think that something would be covered as under a builder's risk policy, for example, pollution, there are some things like pollution that are considered essentially business risks that either properly remain uninsured because there's something that the contractor or subcontractor, for example, should be able to control, or if you really want to insure it, it's going to have to be under some other policy. So builder's risk insurance is another one of these, one of the general types of insurance that you find on construction projects. It's first-party insurance designed to make whole the losses associated with damage to property that the insured or one of the additional insureds has. Again, there are lots of potential coverage issues, lots of potential exclusions, etc. But the basic concept is it protects against damage to property that the insured has while it's doing the construction.